In this video, guys, let's talk about how we can time short selling on two completely different companies. One that we think is overvalued and we want to see some downside movement, and one that we think is probably going to go bust and has already had some significant downside movement. Stick around. Hey guys, warm welcome to you. Alright, so short selling is one of those things that, often I see people trying to short things and I think, is that the very best trade idea you can come up with? Sometimes you've got to be careful you're not letting your ego get ahead of you. You see something that you think is overvalued, you try to put out a short line on it, and you wonder why you're doing that. Is that the very best trade idea you've got? In this environment when we've got lots of stocks that are running strong, there's loads of momentum, loads of money sloshing around, is really shorting stuff you perceive to be overvalued the best use of your capital? That's just a caveat. That's just something I observe and something I just kind of measure myself with before I start kind of trying to put out short lines on stuff that I think is going to unwind. Which is why I haven't last year, much apart from during the pandemic when I shorted some of the UK retailers that were getting hit from that, some Halfords, Stagecoach. Talked about Stagecoach not years ago, it feels like years ago, in the middle of the kind of first lockdown. But that's by the by. Two examples I've got for you now, and it's hypothetical, but people are perceiving them, and people are perceiving these as shorts. Two completely different markets, or completely different companies in completely different chart patterns, and how you're best to time it. Now, I'd like to disclose, guys, I am not a kind of focused short seller. I'm not someone who goes and looks for shorts and is happy to sit with stuff for a long period of time short for an ultimate accounting fraud to come out or some of that. That's not my strategy. I like to trade price action, and so I'm going to approach it from that angle. I'm going to say, okay, you've got a thesis and you want to short these two specific stocks, and what would I want to see, and what do I sometimes look for from price before I would perhaps take a short, using that thesis as a broad idea. So two examples for you. Funnily enough, both electric car companies couldn't be further apart. Tesla, which is just ripping to highs, 738. Now don't forget, it's been stock adjusted. The valuation of Tesla at the moment is 700 billion, marching on. A lot of people think that's overvalued. I've even got some friends who own Tesla stock who are saying, hey, you know what, they think it's overvalued as well, but while it's going up, it's going up. So Tesla, let's consider about if you were shorting Tesla. By the way, I'm not recommending these, never recommendations, guys, just two different ideas. And then the other one is Nikola. Did a video on that, the whole charade of the truck rolling down the hill. And the idea is that you've got these short ideas. How do you time them? So let's look at Tesla. So rather than, for me, and again, I'm not saying I'm not saying this is a great idea. I'm just putting out there as if you thought this was overvalued, how would you time it? So rather than just what I think the mistake that people make, and I've made this mistake before, guys, with markets, is to try to be so accurate in pinpointing the high. They decide that it's overvalued for whatever reason. They go, whoa, 700 billion's way overvalued, I'm shorting it. Right this second, I'm shorting it. And of course it goes high, like here for example, and it goes higher, stops them out, they try again, stops them out, and before you know it, they've lost a lot of money. And they haven't got the deep enough pockets as the institutions have to sit short on this for it to unwind for whatever. Now, because let's be honest, guys, it could easily halve and still be a super bullish, successful company. It go from 700 to 350, and no one will think anything less of Tesla. Elon Musk would be perfectly happy with that, no problem. So there's money there potentially. But the danger is if you try to keep stabbing into an uptrend, you're going to get run over. You're going to get your face ripped off, your face ripped off, your face ripped off. Far better to let it see some weakness and then take the trade. So this is kind of a complete opposite to what I'm going to show you in Nikola in a moment. But you don't want to be pushing to highs or taking double tops or any of that. You want to see it move to lows and start to hold to lows and then start to break to new lows. So you need to see a lot of change. So maybe a move lower, tries to go to high, maybe then pushes lower, maybe starts to hold at lows, pushes up, fails. There you go. And you've seen a lot of potential supply coming in. And I know this is a bit of a loose drawing, I get that, guys, but what have you seen here? You've seen move off highs, you've seen a retest of highs that's failed and move to fresh lows. This is useful. It may be a scrappy drawing, but it's useful to think playing chess, not just looking for the next big move. You've broken the uptrend, you've moved lower, you've attempted to take out the high, you haven't, you've moved lower pretty quickly, now you're at fresh lows, then you did some consolidation below those, it tried to go to highs again and rolled over. All of a sudden, now you can express your short side trade with a good solid stop position. Your stop position may well be here, and you've got a decent target of down here at 350 or 300 or wherever it was. Decent risk reward ratio. You're not trying to be a hero, you're letting the buying back off the throttle first. You're letting some lows get taken out. You're then waiting for a retest, because don't forget guys, things very rarely do a V-shape unless they're real hype stuff. You know, they're going to try and test again, then they're going to do this, it's going to roll over. So you're waiting for a series of events before you start to take the short. And I think, you know, from my perspective, waiting for that is a far more powerful way to take the trade than just trying to stab at it. You know, be prepared to give a big chunk of it off. So be prepared and say, hey, I'm not going to touch it until I see at least a trend line break and it consolidates X% off the highs, and then I see some kind of reversal pattern, some kind of fake out, whatever it is, and then you take it. So that's my thoughts on shorting overvalued, or you perceived as overvalued. Now, flip that on its head for something like Nikola. Let's imagine you think Nikola is going to $5, $1. You think the whole thing is a complete farce, and you think it's going lower. Now, again, what you don't do, my opinion, is you don't just short it here and think this thing's going to zero. They were rolling a truck down a hill, the guy's no good, blah blah, whatever thesis you've got. You don't just stab at it here and take a short position. By the way guys, you might not be able to borrow the share short. Number one, the put options might be completely highly priced. Number two, you know, so there's things to consider here, and if you can borrow short, what's the cost to borrow? So let's assume you can, and forget about any other things for now. Let's just time it. What you're better off doing, again, my opinion, is waiting for some kind of hype, some kind of extra pump, and selling it into that. So you're waiting for another one of these. So if you believe now this thing is going to go down, so say you think it's going to go bust, or it's going to go to $1, whatever. You think, right, fine. You don't want to be shorting here because it could easily double before it goes to zero. It could easily treble. You know, the sweet spot for these type of trades, ones that you think are, you know, just burning cash and eventually it will end, is to wait for the PR machine to be pumped again, to be hyped again, let them do something else, let a lot of retail traders come in, and it's the response to that that makes the difference. It's the response to the spike that you want to get involved in. So if it spikes up, some PR pumping, something news coming out, if it starts to roll over, then you're looking for a short spot on this backside of the move with a stop above the high. All of a sudden now you've got a cushion for the drive to fresh lows. Again, you frame the trade. You're not just sitting here and hoping for it to collapse. You're using that as a lever to get in. You're leveraging on the spike, you're selling on the green to get in. Again, assuming you can short sell and all the stuff is feasible, etc. So two different things. Again, you know, when you're short selling, you're kind of waiting for someone else to commit and seeing the response to that commitment. Like in Tesla, we're seeing the downside, how it responds to a retest, and then looking for the short. Same with this Nikola. If you decide Nikola was a short, you're waiting for it to push the upside, what's the response, and then looking for the short. And in my opinion, guys, that's a better way of approaching it. Are you going to miss some? Sure you are. And Nikola could easily just push to lows and you're like, ah, damn it, listen to that guy, blah, blah, blah. But I think if you can leverage on these opportunities and have a few more ducks in a row before you press the button on the short, because of course shorting is risky, I think you get better opportunity and you get a better risk reward ratio. You can go a little bit more heavier size because your stop is there. Of course there's gap risk, of course there's a lot of risk with shorts, especially with shorting something like this, could go to 100. You know, could completely rip your face off and go to 100 before it goes to zero, or go to 1,000 before it goes to zero. Could sit at 100 for years. So you know that that's the danger with shorts, but just timing them, sometimes being a little bit more clever about that timing. Anyway guys, take care. I'll see you in the next one. Link to in the description below. Take care. Bye bye.